Welcome to the Financial Flossing podcast with Ross Brannon, guiding dental professionals to a brighter future. Ross Brannon is a financial advisor who knows it's not just about your teeth. He helps dental practice owners protect and maximize today's cash flow to plan for tomorrow's cash needs. Find him at rossbrannon.com. On the show, he brings together experts to help dental professionals looking to make smart money decisions to grow their income, turn their retirement goals into reality, and improve their lives. And now, here's your host, Ross Brannon.
Welcome to the show. My guest today is Marianne Scott. Marianne is with the Business Group Resources in San Diego. Companies that work with Business Group Resources claim on average 6 figures of R&D tax credits that they are entitled to. Today, she's a guest on Financial Flossing. Marianne, welcome to the show.
Well, thank you, Ross, for having me. I'm excited to be here.
Well, thank you for coming. So if anyone who has listened to this show knows, I am all about reducing taxes. I love the idea of reducing taxes. So tell me a little bit about what are R&D tax credits? Because I don't think they're very well known about.
Well, yeah, maybe a little bit of history about it, and then we'll get into the details. This is a program that started in 1981 during the Reagan administration, and it was a tool for economic recovery. So it was a way of rewarding companies for hiring and keeping jobs on American soil for innovation and growth. Traditionally, the focus was on manufacturing. Certainly, that was the focus with a lot of the whole economic engine in the 80s was manufacturing. But subsequent to that, different administrations have made changes to it. But most notably, it was in 2015 that they were made permanent through the PATH Act. And PATH is Protecting Americans Against Tax Heights. And they made it much easier for smaller companies that's really less than 50 million in revenue to get them. So, so with that history is that, these are tax incentives. And this is a way that every industry, actually all industries are eligible, except for really doesn't suit the retail, but dental practice is a heavy qualifying sector.
All right, so let's kind of get technical for a second here, because we've used two different words. And most people don't know what they are. And so I want you to explain them and tell us if there is a difference or are they the same word interchangeably. With R&D tax credit and R&D tax incentive, are they the same or are they different?
We do use it interchangeably, but what happens in terms of depending on the company's corporate structure, typically if you pay taxes, and let's say you're a tax structure, C corp, not an S corp, an LLC, a sole proprietor, it could be a PA, and you pay taxes and you're going to get money back. In this case, it's a rebate. You're actually getting cash back in your pocket. These are checks going directly to you. They're a pass-through entity, a tax entity, is and so the rebate in this sense, it's a tax rebate that's coming back to you. Now, in the case of a C corp, for example, a lot of C corps don't pay taxes, as we know, but we can look at a current tax year where there could be some tax opportunity. In that case, it would be a credit. And those credits can be carried forward 20 years.
Oh, wow. So obviously this is a podcast geared towards dentists. And so talking about R&D tax credits or incentives for dentists, how did you get into that? What's your backstory?
Well, my backstory is, I spent 25 years as a senior manager working in global operational roles for Fortune 200 technology companies. I was then, after that, recruited as CEO of a venture-backed startup company, and I continued working with small businesses and early-stage companies until I was introduced by an investor to Business Group Resources. So I just saw this as an incredible way to help small businesses.
Interesting. So there's probably been a lot of dentists on this who are listening to this who have heard something about R&D tax credits. There's probably a lot of misinformation out there. In my experience, CPAs don't deal in this world. It's usually outside firms like yours that do.
Yeah.
So what myths are out there surrounding these incentives?
Well, there's a couple that we come up with all the time. The first is people think that, in CPAs in particular, still think that this is just for manufacturing companies. And, this can't be farther from the truth because of all the changes that have happened, and especially in the 2015 DisPath Act. It's more companies are eligible for it. In fact, this has been so successful of a program that 35 states have emulated a similar program for their states. That's myth number one. Number two is that people think, well, you have to invent something. I have to make the next drug or vaccine in a lab and, be in the beaker with the lab coat on. And no, that is not the case at all. You could just be coming up with researching new ideas, new techniques, improving your business processes or your processes and how you do things. And what we look for is there a custom solution to what you do? And of course, we'll talk a little more about dental practices, about exactly, what are those qualifying activities. And then the third myth, and I get this, is it's too good to be true. I I had a client of or two partners. It was not a dental practice, but a different company. And each one, I was telling them we just did an incentive analysis, giving them an idea of what they're getting back. And I said to one, listen, Dan, we're looking at estimating you're going to get back $215,000. And Joe was $160,000. And you could have heard a pin drop. And the first thing I heard was, this is too good to be true. They had absolutely no idea that they were eligible for this money. So just because, you don't know about it doesn't mean that it's not true. And as I said, this is a program that's been around for 40 years. And also, we have 35 states who have emulated a similar program.
Well, it sounds really good. It sounds too good to be true. And suppose someone's working with you and they go down the process and you say, hey, I'm going to save you X amount of dollars. You're going to get this much money back. Lots of times people don't take advantage of this. Why is that?
Well, the biggest reason is the big A word, and that is audit. And I get that a lot. And it is, I'm afraid of getting audited. We're stretching it too much. In fact, I find that the CPAs, here's the thing, 95% of the CPAs don't do this kind of tax work, right? They're focused on tax mitigation. They're focused on tax planning, getting those returns in and getting the most deductions as they can, for the client. This is not an area tax. This is a specialty area tax. That's why our tax firm, that's the only kind of tax work, that they do. So when I've talked to many CPAs, when it came to dentists, they'll say, I just don't get it. How is it that a dentist would be qualified for these tax incentives? And, the audit thing is the predominant reason. And here's the thing. We've done hundreds of dental practices and thousands of businesses. In the last 17 years, not once did one of our clients ever get audited where an audit was initiated because of these tax incentives. So, the IRS knows these are legitimate, valid tax credits. This is a tax incentive program for businesses. And so it's a matter, we're very conservative in how we do our numbers. We're not there to poke the bear and get more than than what's really owed. And these tax incentives, they go through smoothly for our clients.
The IRS has done a very good job of establishing the intimidation effect, for sure.
Absolutely. And it's interesting is that you read some stuff. And I went through this with a regional bank president I'm working with. And, you read some of the marketing material that these other tax firms have, and they put the whole fear of audit in that. We'll protect you. We got this audit protection plan. Oh my goodness. I said, you've got to be kidding me. No. This is something that, you're owed. These are congressionally mandated. This has been passed by law. And you're entitled, these companies are, as business dental practice owners, you're entitled to these credits or rebates.
So let's talk about how this works specifically for dental practices. Because like you said, there is a misnomer that it's manufacturing. It's not. Maybe it was originally, but it's not now. So how does this fit for a dental practice?
Well, so here's what it is. Dental practices is a heavy qualifying sector. I mean, this is it fits so well for it. So for example, what are the kinds of things that dental practices do? One is you come up with a custom treatment plan for every patient. It's that research, that diagnosing, and that customization of what you do, number one. Number two is that you could be researching and using new materials, such as Invisalign, braces, and veneers. Another thing is you could be buying new equipment. Certainly, that's an important thing. The newest, latest microscopes. It could be 3D printers, any lasers, that type of equipment. Maybe you have an on-site milling machine or a lab. It could be working on complex cases. Maybe you're talking to another specialist, another dentist, to get an opinion on something. You're doing some other kind of research. And lastly, it could be coming up with new or improved processes. It could be business processes, maybe onboarding your clients, your patients. It could be, new payment system. It could be a new technique, in terms of how you're doing, particular braces or whatever, the kinds of things that you do. So these are the qualifying activities specific to dental practices.
So let's talk brass tacks. Let's talk numbers here. So obviously, it depends on the size of your practice. We are speaking in generalities here.
Right.
These are not guarantees. These are not, hey, you can get this. These are ballpark estimates, historical numbers of different dental practices across the country. Throw some numbers out here on what you've seen people get.
Well, I was just going to look at we have a case studies for dental practices. So let me just read off a couple of these case studies just to give you an idea as to what it is. So I just recently did a dental practice here in San Diego, a solo practitioner doing about $2.5 million in revenue, and he's getting back $165,000.
Nice.
We did a dental group practice. They had 4 locations in Orange County. They had 40 plus doctors of dental surgery. They got back $570,000. We did an orthodontist in Las Vegas, 1 location, $182,000. We did a pediatric dentist, another one in San Diego, $111,000. A generalized dental group in Columbus, Ohio, that was 2 locations. They got back $100,000.
What is the driving factor? Because I'm sure plenty of people don't get that much. What's the driving factor for it to be a larger number?
Well, it's going to be number of employees for sure. You're paying payroll taxes, right? Well, revenue, the more revenue you're making, the more your potential for taxes, you're paying more taxes, potentially paying more taxes. But it also that plus the number of employees, that you have. And it depends also on the equipment. If you're buying new equipment, there could be several things related to that.
So what are some reasons why this might not work for some people? They may not get good results when they go through the process.
Well, here's what we do. Because, in order to see if a dental practice qualifies, we want to make sure we want to work with someone, and we're not here to waste somebody, a dentist, their time. We don't want to waste their time or ours. And what we do is we offer a free incentive analysis. So we'll do a free look. Actually, the good thing is right now we can go back 3 years, federal, 2018, 2019, 2020 are the 3 years that dental practices, dentists can take advantage of this. So we'll go through a discovery form. It's actually a snapshot of your business. I go through that with the dentist, with the owner. We have questions specific to the R&D tax credit. And then we get their taxes for those 3 years. Our CPA will take it 1 year and do a free analysis, and then I could give them a good idea as to how much money. And once we come back with a report, we know if there is no recovery, let's say for whatever reason, maybe they took a lot of deductions and there really isn't anything, the write-offs are just gone, whatever, we'll say no recovery. There's nothing there. But if there is, we'll come up with whatever we think it's a conservative estimate as to how much money that a dentist would be getting back. So at that point, we know 100% for sure that dentist is eligible for those tax credits and can get that money.
So we talked a few minutes ago about how the myths out there sometimes can make people hesitant to move forward. Have you had a lot of experiences or any experiences with people being a little hesitant to move forward, but ultimately moving forward and coming back and like, oh, Mary Ann, thank you so much. I'm so glad we did this.
Oh, yeah. I actually had a dentist here in San Diego. We actually went through the process. We did the discovery form. We gave him an estimate. He said, yeah, let's go for it. We estimated $165,000. And then our CPAs did the work with the returns. And so during that time, he switched to a different CPA. And actually, so the CPA firm, his CPA came back and said, don't do it. Don't do it. This is crazy. I've never seen a dental practice get this. So I get on the phone with the CPA and walked him through the qualifying activities. Here's what we do. Here's why this dentist qualifies. And you know what? He still didn't get it. So I got back to the dentist and we had a discussion. He was still hesitant. And I said, look, you are entitled to this. These are congressionally mandated. And then, finally, I said, look, does your CPA this is a business decision. Does your CPA make your business decision? And he said, no. And I said, well, then what do you want to do? And he said, well, he actually waited, slept on it it was over a weekend, got back to me and said, let's go forward. And now he's collecting close to $180,000 because there's some interest that he gets on the money. I circled back with that CPA and I said, well, now you can see he got these checks and he still didn't want to recognize it, didn't want to acknowledge. So it's funny. It's whatever that mindset is. I certainly, whatever. I'm not a psychologist, but there's still a real block in terms of understanding and seeing that this can be very beneficial to dentists.
Now, to clarify for some people out there, is this a one-time thing or is this something you do every year?
This is something you're eligible every tax year.
So
yes.
You go back 3 years and you get $90,000. Well, let's assume it's the same $30,000 a year. So you tell me in this example I'm making up here, I could get $30,000 a year tax credits.
That's correct. That's right.
Now, if someone is really good at tax planning and they have a low taxable income, even though they make a lot of money, will that affect the amount of credits they get on this?
Oh, yes, it will. Yeah, because it is directly correlated to the amount of tax that you pay. So if you don't pay a lot of tax, you may get back maybe $15,000, $20,000. Okay. So it just depends. Every dental practice, it'll just depend on what you've done with your taxes.
$15,000 or $20,000 is still.
Yeah, I could take a nice vacation, pay off some bills.
You send me a check for 15 or 20 grand. So like, if someone's like, hey, I'm interested in this type of thing, like how do they kind of learn more about it, get going, things like that?
Well, reach out to me and you can get a hold of me on my website.
Let's give them the plug for all your contact information. How do they get in touch with you?
So my website is Maryann, MARYANN.businessgroupresources.com. And my email is Maryann, MARYANN @businessgroupresources.com. And if you want to call, it's 858-382-8830. And I'm also on LinkedIn.
And the process, it's not that hard. Describe the time commitment to do something like this.
Well, it's really, we streamline this. And so the very beginning, we would spend about 45 minutes to an hour. We would fill out a discovery form that gives us that snapshot, as I mentioned, of the business and answers questions specific to the R&D tax credit. It also includes a non-disclosure agreement, so any information you provide is kept confidential. Then we have you upload 3 years of taxes. As I mentioned, we can go back 3 years. Our CPAs will go off and do an analysis on 1 year. So that's the first part, is the hour with me getting the taxes to us. After that, it's 2 more 20-minute meetings. That's it. The next meeting is to go over the report. That's 20 minutes. Then we go over what it takes for next step to if you want to move on and do the work, want us to do the work, you just sign a 1-page consulting agreement, and we have a statement of understanding, a letter of engagement, and then we do the work. And a couple weeks later, I come back with another 20-minute meeting, and I give you the final results, the final numbers. So that is it. Once we complete that, then you just DocuSign, it's e-sign those amended return documents. That's it. So in total, it's maybe about 2 hours, the whole process for your part.
And how long until the checks start coming in?
Well, the COVID thing has really thrown an anchor, a little bit of a problem in terms of delays. They were shut down for 4 or 5 months last year. And so right now we're seeing checks coming in anywhere from 10 to 12 months, 14 months. But we're seeing it speeding up, especially now that we're estimating it's going to be anywhere from 6 to 8 months.
Okay. That makes sense. So, yeah. Maryann, you've listened to a few of the podcast episodes, so I'm going to ask this question right here.
Yeah. What
is the best book you've read recently, or what's a good book that you recommend?
Well, you know what? I listened to Kim Butler's, she was on your podcast. I thought she was phenomenal. She's the whole area of life insurance, which, I really didn't know a lot about. And I just got her book on the 37 myths. I think it's myths of life insurance. Now, a little dry, but you know what? Very entertaining, the way she wrote it. And so that was a great thing.
Well, Kim is great. Kim's fantastic. She has lots of books out there, and you chose one of the thicker ones. Most of them are about 80 pages long, but they're quick reads, but you chose the thicker one. But that's really informative, but it can be a little dry if you're not into the subject matter. So, but yeah, anything Kim writes is good. Any other books that you've read recently or you recommend?
Oh my goodness. It was called now you're getting me. It's the 4 engagements, the 4 something, Miguel de Luis. Now you got me.
Well, that's okay.
I have it on my book stand and I look at it. So there you go.
Nah, it's completely understandable. That happens to all of us. That's not a big deal. Maryann, this has been a really, really entertaining and informative topic conversation today. I really appreciate you being on. It's been a pleasure speaking with you today.
Well, thank you, Ross, as well. Take care.
All right. You too. All right. You've been listening to the Financial Flossing Podcast with Ross Brannon. We'll see you next time.
This has been another episode of Financial Flossing with Ross Brannon, guiding dental professionals to a brighter future. If you liked what you heard, consider subscribing wherever you listen to podcasts. For more on Ross Brannon, visit rossbrannon.com.
Registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ, 3664 Coolidge Court, Tallahassee, Florida, 32311, 850-562-9075. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. North Florida Financial is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0L10073. Arkansas Insurance License Number 161-39032. 2021 119535. Expires 423. That last part can also say 2021 119535. Expiration April 2023.
This podcast is for informational purposes only. Mary Ann Scott is not affiliated with or endorsed by PAS, Guardian, or North Florida Financial, and opinions stated are her own. External sites are provided for your convenience in locating the related information and services. Guardian, its subsidiaries, agents, and employees expressly disclaim any responsibility and do not maintain, control, recommend, or endorse third-party sites, organizations, products, or services, and make no representation as to the completeness, suitability, or quality thereof. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. Ross is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ, 3664 Coolidge Court, Tallahassee, Florida, 32311, 850-562-9075. Securities products and advisory services offered through PAS, member FINRA SIPC, financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. North Florida Financial is not an affiliate or subsidiary of PAS or Guardian. Arkansas Insurance License Number 161-39032, California Insurance License Number 0L10073, 2022 132000, expiration 124.